prices in the Vancouver real estate market are falling. Yes, you heard that correct. If you can believe it, prices in the Vancouver real estate market have started to fall. They are going down. And this likely sounds very counterintuitive to everything else you're hearing out there right now. And that's fair because we're just coming off of the April stats where we're basically at record highs across the board, right? We had record high sales volume for the month. We're at currently record high sales prices through all three metrics, and that's all correct. And I think to accentuate that, I was just watching global news yesterday, and there was a piece on multiple offers and how crazy the real estate market is, and how they're going to do something about multiple offers to make it a little bit more fair and transparent. And I thought to myself, this multiple offers have been going on in this cycle alone for the last 8 to 10 months. So if the news is really only grasping that now, it really goes to show sort of how untimely they are. And so that's a big reason why we're here today, is to get super into the data. The market here changes very quick, and we're super happy to get into sharing this information with you, because we want you to make educated decisions. And because we're noticing a big change here, we thought we would dedicate an entire episode to it for you.
Yeah, I mean, when you look at what's happening, when you look at any kind of other chart, like any kind of other investment, right? You always want to try and assume what a price target is. You want to look at the metrics in the market at play. Who's buying, how much are people buying, how often are they buying, and that information starts to tell you a story about where things are either going, and especially where they've been, right? So trying to figure out and trying to get ahead of the market, the curve here, is what we're trying to do, and show you guys what those numbers look like and why we feel the way we do. So, I mean, when we start looking at, we should probably start at the top with activity levels, because that's, I think, probably one of the best indicators as to where the market's headed, right, in any given time, whether it's going up or down. Excuse me. And right now, I believe last month we were looking at, was it about 246 deals a day? Does that sound about right, Dan?
Yeah, that's dead on.
Yeah, and then down now to about 222. So it doesn't sound like a huge number, but it is down about 11%, right? And that's enough for a red hot real estate market to feel some cooling effects, right? So, and I think that's what we're starting to see here.
Yeah, I think for context as well, let's keep in mind March was an all-time high for any given month. And that was followed with April, which was an all-time high for that month. But the caveat being here is that April did drop about 800 units in sales volume from that all-time high in March. And, now we're going to drop, about another 300-ish or something. And so if you go off of that top that we saw in March, May here, it's going to record a total of about 4,650 units for the month, but that's 22% less than just 2 months ago. That's what's interesting. That's what the data that we want you to get ahead of is.
Yeah, that's a big number, right? The other thing to think about too is, the last 4 months was a significant rise. It rose quickly, right? It was kind of like the tail end of that run. And, the news got out, multiple offers were the norm. The fear of missing out kicked in, and it went into overdrive, right? And a lot of people jumped in and bought. And I think, I think we saw, there's a pullback coming. There has to be. It just got too gnarly.
It did happen too quick, right? I mean,
yeah.
If you look at if you look at pricing, and we're going to reference HPI pricing here, it was March of 2020 that the average home was $1,027,000. Mm-hmm. And, between March and December, that only went up by $20,000. It ended up at $1,047,000 by December. But in the next 4 months, between December and April, it jumped up about $105,000 in 4 months. right? So
And that's
obviously that's unsustainable.
well,
That
and
that
that's what
pace
I
of
that
growth.
yeah, and so is the way that growth happens, right? That's also an unsustainable uh, average to continue, right? People were recognizing that there was a run that was happening, and they were kind of late to it, if you will. And the price pushed like crazy in that last little part of the 20-month bull run that we've seen.
Right.
Um, and I think now you're gonna see a correction. There has to be. When you look at the last 20 months of growth and where we are currently, it speaks to being overheated, right? So I think, and we'll get into those numbers shortly here, but we'll show you how it's going to retract, because you once you hit the averages over the course of multiple years, you'll see that we accelerated too quickly at the end here.
Yeah, good point. Good point, Brian. Okay, so we know no activity levels are dropping and they're dropping quickly. Um, let's look at the new listings.
Yeah.
So similar to sales, both the last 2 months had record sales, listings hit the market for their respective months. Um, the pace of listings, it actually has slowed down a little bit from about 397 a day to 377 a day. But let's remember, we are coming off of absolute record high new listings amount. Um, but as you can tell here, that 5% drop, that is obviously far less than the activity levels
Yeah.
that are dropping around 11% from just last month. So if the activity levels are slowing more than the listings, what's the result of that?
It's
Inventory.
higher inventory. Yeah.
Yeah.
It's your inverse relationship.
So to get into that, last month ended the month at around 10,500 units actively listed, excuse me. We're recording this on May the 14th here. We're halfway through the month. That's already up another 900 units to about 11,400.
Yeah, which is further going to create, downward pressure on price, right? Um, so, and when you look that the activity levels are down 11% and the listing amounts down 5%, you know, that inventory number is going to continue to climb, and price will be affected as a result, right? It's inevitable.
We're up
Um,
already 8.5% in inventory over the beginning of this month. And, that trajectory has been straight up now for a couple months. And this is something to definitely pay close attention to, because as inventory rises, what Ryan was just talking about, that starts to change. So we saw inventory increase in March, in April, and it's going way up in May.
yeah. And then we start to see, further effect. The properties that do come on the market tend to spend more time on the market because there's more of them. Buyer selection's increased, the pressure is off, and we are moving back towards a more balanced marketplace, right? I mean, we're still very much in a seller's market, but again, some of that sales to active ratio is a lagging indicator, right? So we won't see those changes until the ends of the month. So we can kind of predict where we think it's going,
Mm-hmm.
but generally speaking, the time on market is going up.
There you go. So let's dig into that sales to active listings ratio that Ryan just talked about. Because just like almost every single other number, March 2021 was a record high for that ratio as well, hitting 59%. But that dropped pretty significantly in the month of April, down to 47%, right? Keeping in mind that anything above 20 is a seller's market.
Yeah.
Halfway through May, and we're down to 40%. So it's already dropped 7% this month after dropping 12 in April.
Right. Yeah, I mean, it's just more indication that there's approaching that 20% sellers market, which is obviously a much healthier place than the 40%. But really, what we're targeting is a balanced market, right? And we're definitely in that direction. It'll be interesting to see if it stays there. I think we're going to see a little bit of a correction and then a comeback, but we're not there yet. And then that time for that to happen is going to be much longer than the 3 months. But let's just focus on what we think is the imminent future here.
Yeah, I think at that pace, it could absolutely hit that high end of a balanced market by summer.
Yeah.
I think that's
Exactly.
very reasonable. And you got to think, we haven't been in a sustained balanced market dating back to September of 2019.
Wow.
And that was the end of it, right? It
Yep.
started in about June of 2018 and lasted
Mhm.
1 year in a
Right.
balanced market. And then it went up since then. But yeah, I think very possible that we're going to see a balanced market by summer. I think leading into that as well, like obviously last year, 2020, the pandemic year was, it kind of blew out any type of typical real estate cycle that we're used to seeing, right? Where the spring market was just devastated, of course, because we were shut down. And then when things opened up, it was summer essentially, or things loosened up, which is typically slow. But then there was all this sort of pent up buyer demand, which turned into these low interest rates, which turned into all this QE and excess funds sloshing around. And that just made fall and then winter, also normally slow, extremely robust.
Yeah.
Um, and I guess what I'm alluding to here is it's starting to feel like we're coming back into a bit more of a typical cycle year for real estate sales, meaning right now, spring is expectedly high with activity
Yeah.
levels.
Yep.
But by this summer, especially with people likely being able to travel a lot more than last year, I think real estate's not going to be top of mind like it was last year.
Yeah. And then when you've got you've got 5-year fixed rates from banks that are on the move, they're increasing, right? So the appeal isn't what it was from a lending perspective, and we know that that's going to change in the coming years as well. We know there's inflation in the economy right now, so you know the ratcheting up of interest rates in the next years at some point is going to take place, right? So I think people's maybe their focus is starting to change. Also, I think on the imminent future being this particular summer, man, I think a lot of people have been cooped up in their homes and they're excited to try and do something different, right? And I really think there's going to be a focus. I think tourism's going to explode, and I
Yeah.
think um, you know once you've got your second dose of your vaccine here, I think traveling down to the States is going to happen. So I think you'll start to see other parts of the economy really perk up. um, you know all of that hopefully leading towards some more of a balanced economy, right?
Correct. Okay. So let's do a quick sort of summary here. Activity levels going down, listings going up, inventory going up, time on market growing, sales to active listings ratio dropping quickly. All those are strong indicators that prices are going to go down. And not only are they going to go down, but they have started to. In the first 2 weeks of May, we have seen a pretty significant drop in both median and average prices. And these drops are probably the most significant that we've seen in 20 months, right? 20 months of a bull run, the odd little up and down here. And yes, of course, April of last year was devastated. So we're going to call that kind of a wash.
Mm.
But to get into brass tacks here, the median price just so far, the first 2 weeks of May, has already dropped 6% off of what it was last month. That's $53,000 reduction so far. Right. In April, it was $921,000 was your median. That's already dropped to 868,000. Excuse me.
Yeah. So and you mentioned earlier in the conversation that in that balance market, the price grew $22,000 over the course of a year. Is that what?
That was very close. Yeah. Yeah.
Yeah.
Exactly.
Right.
Yeah.
So we're looking here at a price swing of $53,000 in a month. Yeah. It
Yeah.
sounds like overheating, right?
For
It sounds
sure.
like a correction to me, right?
Now the HPI is a slower mover, and I think we both agree here, Ryan, that HPI will likely be up next month because it is a bit of a lagger. But again, we want to give you as timely of information as possible, and that's why looking at median and average is giving us a story that's worth talking about.
Yeah. It's not going to. It's changing the narrative a bit, right? Not a bit. It is changing the narrative. And the other thing to look at too, when you look at that medium price drop of about 6%, it's concurrent with every other percentage change that we're seeing in activity levels, that we're seeing sort of in listing amounts and inventory growing. It's all in line with the rest of those movers, right? So it's consistent, which lends me to believe that this is the path that we're going to see for the next little bit.
Yes, agreed. And let's give some data here regarding the average price point. Average prices in the first 2 weeks of May are off 3.5%, down about $41,000 from the beginning of the month.
So it's more of the same.
It's more of the same, right? Your average home was 1,213,000 at the beginning of this month. Right now, that average has dropped to $1,172,000.
Which is the first real drop since this whole thing started.
That's it.
Right.
Yeah. So let's be a bit clear here too, though. Does that mean that your average $500,000 condo is going down $6,000 this month?
No.
No, no, it doesn't. And it's very important to break this down, I think, kind of by property type, because what we've really seen is the detached market was the first to kind of get superheated during the pandemic. Then I think a lot of people got priced out or just kind of offer fatigue on that asset class and moved down into townhomes.
Yep.
That got overheated. And now we see a lot of the activity in condos and sort of that sub 700, 800K price point.
Yeah, it's reminiscent of the single family marketplace, just in a different marketplace, if you will.
Yeah.
And largely driven by the other thing to remember too is, you're looking at your 2 million plus properties. The buyer pools for 2 million plus properties are much smaller than the buyer pools for $500,000, $600,000, $700,000, $800,000 properties, right? So, whether or not the heat was always there, or if it's moved into that sector now, it's always going to be a bit more competitive just because it's more affordable, right? So you got to take that into account as well. But the last few that I've been dealing with at that price point, we've seen between 4 and 8 offers on the properties, right, and selling over the list price.
Yeah, exactly. I think there's a few other things that are going on right now that we haven't seen in even a month, let alone 10 months. For example, we just got a bully offer accepted today. There was no way you're getting a bully offer accepted even a month ago. No way. No way.
That's right.
And we were able to put one of those together just today. And, like we've been talking about for a bit here, and you may be hearing elsewhere, is that the bidding wars are nowhere near what they were. That is continuing to shrink.
Yeah.
And, there's all these other indicators that prices are going to go down. But I think actually one more thing I want to tie into the price drop we were just discussing is, we're seeing a lot more activity at a lower price point than we've had over months, right? So that naturally pulls down median and average prices.
Correct.
And yes, while that sort of condo sub 700K seems to be the most active right now, even that is spotty. And what I mean by that is we are getting deals done under ask right now, meaning, people are selling for less than their list price. And that's going to help pull the averages down.
So I guess, I'm assuming a lot of the listeners here or viewers are thinking to themselves, so what does this mean for me? Right? Yeah. If I'm a buyer, what does this mean for me? If I'm a seller, what does this mean for me? Right? Because life is still going to happen and you still need to buy or you still need to sell your property. So, or you're an investor and you're trying to time the market here, right? So, I think there's some things for us to consider, right? So maybe let's take the perspective of a buyer right now, right? If I'm not selling a property and I'm entering the market for the first time here, Dan, is this a good time for me to get into the market?
I am advising my clients right now that if they do not have a time pressure and they are looking to get in this year, I'm advising to start shopping a lot more serious around summertime. I would hold back for a couple months right now.
And that's in line with what I've been telling my buyers as well. The ones that are not selling property to get into property. I mean, when you're selling out of an asset and moving into, maybe you're moving up or you're moving across, whatever it is, or even moving or downsizing. Downsizing, for example, you have to buy at some point here, right? So if you're downsizing now, before we move into the sellers, but I mean, I guess we can do that. If you're a seller, I would be seriously reasonable with your list price now, understanding that the potential for it to go for, even over the list price isn't necessarily going to happen anymore, right? I recently sold my condo and that was the case, right? So, and especially if you're a single family seller here, you really got to think about what's on the market right now and where your list price is. for the right homes, we're still seeing a ton of action. We're still seeing a lot of interest. But for your average Vancouver home, you got to get really realistic because the inventory levels are definitely on the higher side now, and you're going to be competing for the next sale, not the next highest sale.
Yeah, I think it's very important for us to be a little bit more specific and clear here too. Look, everyone's going to have their unique scenarios, and of course, if you come to us as a buyer and you're looking to buy a detached home in Kitsilano today, our strategy and advice is going to be very different than if you're trying to buy a one-bed condo in the downtown area.
Correct.
Right. So when we're saying, yeah, the average person we're telling to maybe wait till summer, it's very case specific. So, you know, don't take everything we say to mean that that's what's right for you. And obviously we're happy to have a conversation to dial into your specific circumstances. But as a whole, and for the average buyer, that's been a more common conversation we've been having lately.
Well, yeah. And I mean, if you, and it just speaks to the narrative of the marketplace, generally speaking, right? I mean, if you had that option, you would wait. You know, if you're renting month to month and you're wanting to buy and move into your first condo, buy in June or July. You know, might be a really good time to actually pick up a bit of a deal, right?
Yeah, and not compete and be able to do it with subjects and be protected and do it with a bit of sanity and maybe even some fun here, you know?
Yeah, and enjoy the touring patios and stuff like that in the summer.
There you go. And yeah, for sellers too, and we are seeing this all over the place. Do not expect to get March numbers. It's gone. They're gone, right? We're seeing all these people, they are listing at what they think is an aggressive price. They're holding offers. They're either getting none or they're not getting the number that they want. And then they up the price the next week. And it's just
not the way it's going.
The optics are horrible. It's not, Ryan's right. It's not the way it's going. And you're going to sit for a long time. In a market that is changing fast, and again, it's all going to be case by case, but generally speaking, if you're listing a home now, you're going to want to list ahead of the market and not expect a blowout, because you know we've been through enough cycles in this industry to know that if you price above market or again hold and not do it correctly and not sell in that first week, you're going to sit.
You're talking down like the price curve that we're talking about right now is cresting, right? And it's starting to come down. So when it's starting to come down, if you price yourself above where the trajectory is headed, you're just going to sit on the market, right? And that's exactly what Dan's saying. You got to price yourself ahead of that market curve. And that's how you'll get a decent sale number. Because, you know, even to date, you know, there's still been a huge rise in value so far, right? But you don't want to sit on the market forever trying to actually realize that value, knowing now that you've passed your opportunity, right? Yeah. So even if it means you got to take a 1 or 2% hit on what you thought you would get, you know, you're still going to capitalize on that gain.
Agreed. And now more than ever, and especially moving forward as prices drop, make sure that if you do have to list your home, that you're working with agents or a team that are going to actually work hard and really market that home, because the days of your simple 20, 30 photos on MLS and it's selling in a week, those days are quickly getting behind us. And so to achieve a really, really good price and a good time frame for the sale of your home, you need it to stand out, and you want to talk to agents that are doing above average marketing for your property.
Right. Or those that can find, we've just done put an off market deal together, right? And again, that's not something you typically see in a seller's market. Off-market deals are normally in a balanced or in a buyer's market where, it's advantageous for the seller not to have to market the property. But that comes down to skillful networking, tracking, all that kind of stuff. And that comes from a good skill set. And that's where we're headed right now. So to get those good deals, you really want to be working with a professional who's been through these cycles.
That's it. So that kind of wraps up what we had to say to you guys today. Things are changing quick. You know, you're hearing it here probably for some of the first time of this cycle. Prices are dropping and look to drop quicker in the upcoming months. This is, of course, barring any outside circumstances that are far out of anybody's control. But we're going to keep you up to date. We're going to keep you well informed. And thanks as always for watching and listening.
See you guys next week.